All right, let's talk about something that, well, it can be a little intimidating for a lot of us, Canadian taxes. But my goal here is to cut right through all that noise and show you how you can turn tax season into refund season. So let's get right into it.
Does this feel familiar? That little knot in your stomach when you think about filing your taxes? You start asking yourself, am I missing something? Am I leaving money on the table? Look, that is a super common feeling, but it really doesn't have to be your story. Understanding the system is the first step to conquering it.
Get this. The Canada Revenue Agency has over 400, yeah, you heard that right, 400 potential tax credits and deductions. Now, that sounds totally overwhelming, I get it. But here's how I want you to think about it. All that complexity, it's actually packed with opportunities for you to lower your tax bill. You just gotta know where to look.
So, how do we unlock all those savings? Believe it or not, it all comes down to understanding one single fundamental difference. It's the key that makes everything else just click into place. Let's break down the two most important words in the entire tax world: deductions and credits.
Okay, first up, a tax deduction. The absolute best way to picture this is to think of your total income as a big pie. A deduction lets you shrink the size of that pie before the government comes to take its slice. So a smaller pie means a smaller slice for them, right? You end up getting taxed on less money.
Now, a tax credit, that's a whole different beast. This isn't about shrinking the pie. This is like having a gift card or a coupon that you hand over right at the end. It directly reduces your final tax bill. It doesn't touch your income. It just chops down the actual amount of tax you owe, dollar for dollar. It's a straight-up discount on your taxes. And here's where you can see that core difference side by side. Deductions, like your RRSP contributions, they reduce your taxable income. And because of that, their value actually depends on your tax bracket. The more you make, the more deduction saves you. But credits, like when you make a charitable donation, they reduce the final tax you have to pay. Their value is fixed. It's the same for everyone. So let's say it one more time because this is crucial. Deductions shrink your income. Credits shrink your tax bill.
But wait, there's more. When it comes to credits, there are actually two flavors. First, you've got your non-refundable credits. These are great. They can take your tax bill all the way down to zero, but that's where they stop. They can't get you a refund by themselves. Then you have the refundable credits, and these are the real game changers. These can actually push your tax bill below zero. And what happens then? The government literally sends you a check. We're not just talking about saving money anymore, we're talking about getting cash back in your pocket.
Okay, theory's over. Now that we've got the lingo down, let's see how this stuff actually applies to your life. We're going to look at some of the biggest and most common credits and deductions, the ones tied to your home, your family, and just, well, living your life.
So, are you buying your first home? Huge congrats! And there are two massive benefits you need to know about. First is the home buyer's amount. This lets you claim a $10,000 credit, which can knock up to $1,500 right off your tax bill. And then there's the new First Home Savings Account, the FHSA. Man, this thing is a powerhouse. You can put in up to $8,000 a year, you get a tax deduction for it, and then, get this, you can pull it all out completely tax-free for your down payment. It's the best of both worlds.
And for all you parents and caregivers out there, the savings can really stack up. The Canada Child Benefit, that's a tax-free monthly payment that just shows up to help with, the costs of raising kids. You can also deduct your childcare expenses. Think daycare, nannies, summer camps. Just remember, it's usually the spouse with a lower income who claims that one. And if you're supporting a family member with an impairment, don't forget the Canada Caregiver Credit. It can make a real difference.
All right, let's talk health and wellness, because a lot of people miss out on this. You can claim a credit for a huge list of medical expenses. We're talking dental visits, prescriptions, new glasses, even things like fertility treatments. It's a long list, so keep your receipts. And for anyone with a severe and prolonged impairment, the disability tax credit is an absolutely crucial non-refundable credit that helps offset those extra costs.
Okay, now for the big two, your powerhouse savings accounts, the RRSP and the TFSA. Let's break them down. With an RRSP, you get a tax deduction now for your contributions. It shrinks your income pie, just like we talked about. Your money grows tax-deferred, but you'll pay tax on it way down the road when you withdraw it. This makes it amazing if you're a higher income earner. The TFSA? It's basically the opposite. No deduction today, but all the growth and all your withdrawals are 100% tax-free. This makes it perfect for lower income earners or if you have more flexible, shorter-term savings goals.
Of course, your career and your education come with their own set of tax perks. It doesn't matter if you're an employee, running your own show, or hitting the books, there are ways to cut that tax bill. Did you have to move more than 40 kilometers for a new job?
You can deduct those moving expenses. For lower-income folks who are working, the Canada Workers Benefit is a fantastic refundable credit that can give you a real financial boost. And for all the self-employed people out there, you know the drill. You can deduct a ton of business expenses, from advertising and vehicle costs right down to a portion of your home office.
Students, listen up. The cost of that degree can be eased a bit at tax time. You can claim a credit for your tuition fees, for sure, but you can also claim the interest you've paid on government student loans. And here's a pro tip. If you don't have much income and don't need that interest credit this year, you don't lose it. You can carry it forward for up to 5 years to use when it'll save you more money.
All right, knowledge is great, but it's useless without action, right? So let's wrap this up with a clear, simple action plan to help you go into tax season feeling totally confident.
First things first, pull out your phone, open your calendar. For the 2025 tax year, your last day to pop money into your RSP is March 2nd, 2026. The big one for most of us, the deadline to file and pay, is April 30th. Now, if you or your partner are self-employed, you get a little extension to file until June 15th. But, and this is a big but, your payment is still due on April 30th. Don't forget that.
You see this quote? I never thought filing taxes would be so easy. That feeling is actually more and more common, and it's all thanks to modern tax software. You've got choices. You can use some amazing DIY software that literally walks you through every step of the way, and a lot of it is even free. Or, hey, if your situation is a bit more complicated, hiring a pro is always a great option. The most important thing is to pick the path that makes you feel in control.
So there you have it. Armed with all this info, you are more than ready to take on tax season. The system isn't this big, scary monster, you know? It's just a set of rules, and now you know how to use those rules to your advantage. So I'll leave you with this question. What's the very first credit or deduction you're going to make sure you claim this year